This is Justin Pulitzer. This is my weekend video for Sunday, March 13th, 2022. A lot to cover. This may be a long video. We're going to see. All right, so first and foremost, let's talk sentiment. Then we'll get into a little brief macro. Then we'll go through the usual stuff, the indicators we watch, the major market indices via ETF, as many Momo names as we can fit in. And then I have, surprise, surprise, a lot of requests. Before we start, I have one DM service spot open. And if you want it, let me know. You could message me all day, pretty much every day, about stocks or positions you're considering putting on, the ones you're already in, setting price targets, setting stops, how to hedge, so on and so forth. So yeah, there's only one of those slots available. If you want it, message me. Anyway, sentiment, better than the prior week, which had been pretty crappy, but surprising because we've been down 1, 2, let's see, 1, 2, 3, 4 or 5 out of the last. Let me just see this. Yeah, I mean, at most of the last week, 1, 2, 3, 4, 5. So 4 of the last 5 weeks, and we had the State of the Union, we had the non-farm payroll, and then we had this move this week. So we'll see how this sentiment finishes out in the end, but it did pick up for the bulls, a little bit off the bears, and I guess a lot of the sideline money, oddly enough, came into the bullish side. That's not so great, rate of change wise. Overall, I mean, this is still a pretty crappy number though, so maybe a little bit of bottom fishing. Sentiment for the money managers is still pretty bad, and that's totally understandable given the situations I think a lot of them are in. A lot of funds are long only, or have to be fully invested, and things are obviously not going well. You're also having a lot of blow-ups. The metals markets have been. There's this guy Big Shot here that I've been reading about. He's a very rich guy in China, and there's like this major margin call, and he may owe like $6 billion or something, and JP Morgan is his bank. So I think that's why JPM has been pretty weak, and then there's the fear of the contagion of, people like him blowing up in other markets. We're seeing massive standard deviation moves in very quick order, and I think the current climate is sort of like this risk off, and we have the Fed ahead of us, and just bad market dynamics. I've mentioned before that good news, the pops get sold pretty fast, and then bad news, you just get these crashes. So COVID, we're kind of out of COVID season, although it's running pretty rampant in China right now and in other parts of the world. I don't know if we're going to get another wave. There's always seems to be another wave, right? A new variant, to mask up for Fauci style. Things in Ukraine are pretty crazy. You have all these U.S. companies virtue signaling, and the flailing Biden administration putting all these sanctions on. They're trying to, have regime change in Russia and maybe even in China. But China is backstopping Russia, and you also have India and Turkey who are trading with them too, and taking Russia off the SWIFT system, and all this stuff could create some kind of parallel banking system, and I do worry put the dollar as the reserve currency at risk. I think the Biden administration is acting very recklessly. So there's that. There's also, of course, the China worries about them going into Taiwan, and you've seen after RSX, the blow up and freezing of that, you're seeing some massive meltdowns in some of the Chinese stocks, and the people who tend to be exposed to those have some issues as well. Oil, of course, is a big drag on the economy, as well as all of these other inflationary inputs in the commodity market. You're talking about fertilizer and so on and so forth, but oil in particular is a big drag, because if anything needs to be manufactured, it pretty much has oil touching it, and if it needs to be transported, it's the price of transportation is up gigantically. I was just watching on the news this evening, and they were saying that a year ago, to fill up like one of these big commercial trucks was $910.20, and now it's $1,500, $1,517.40. So it's a pretty big jump, obviously, and that fee, the increase of transportation goes into input costs, and you got to think shipping prices are up, and that's probably why Amazon and company have been a little bit weak, and retailers. We saw today that there was a pretty crappy consumer sentiment number, and let me pull this up. It's like one of the worst in a couple of years. Just love when these things take forever to load. They always load up so snappy when I'm doing the prep, and then when I need it, it's like forever. This has been steadily coming down, and we're below 60. I mean, 59.7 isn't a terrible dire read, but if you look at the divergence index, we're down 0.21. I mean, the lows we've seen recently are minus 39, so I guess there is potentially some more room to drop. I mean, I guess it's possible we bottom out here, but given the fact that oil is probably going to stay high for a while, and the markets are not doing well, I just don't see how consumers are going to be, giddy. So there's that. And then, of course, we had a little bit of an uptick in the jobless numbers, and then the CPI number every week is just a disaster. And the interesting thing about this CPI number, which just seems to go up every time, is that this only includes 4 days of the Ukraine invasion. So there's higher oil prices still to come. It seems like every week we get worried about a number, we see the crappy number, and then we freak out about the number we already knew was going to be terrible. So that's the pattern. So, traders, I guess, do what works until it doesn't. So that's part of the issue. And I think we also have some calendar problems ahead of us. I was mentioning we have the Fed next week, but we also have Quad Witch for the end of March. And then after March, we have, the first couple of weeks of April where people are raising money to pay the tax man. And then once you're through April, we may have to deal with sell in May and go away. I am thinking that after the Fed, at some point, it may just be like the last 2 days of the month, but there probably will be some end of quarter markup, I would think, given how crappy the first quarter was. Some of these funds have to show some gains. So I am thinking that that's my operating hypothesis, but my fear for the markets is that after the first quarter, after March, that's when some real pain could potentially happen, and we'll go through some of the charts. So it might be a good idea to lighten up onto some rallies, or maybe even put on some hedges, via, either outright buying puts, or maybe doing put spreads, selling covered calls. I think all those strategies are good to implement on pops. Okay. As far as the VIX goes, this is a little bit encouraging if you want to look for silver linings. We are below the 10 MA, which has been the support, and we are below an interim trend, although we did rally back. The VIX did kind of get a little pickup into the end of the day. I think that's just because the market got much weaker toward the end of the day. There's this fear, of course, of Sunday night futures when we get war news and so on and so forth, or maybe crappy Asian market opens. So and just for me, honestly, I've been kind of trying to avoid weekend risk, and then, I'll be more keen to buy on like a Monday or Tuesday if we have, a big down open, for bounce plays. So I think a lot of the weakness came from the fact that we had an up open after, kind of a somewhat okay week, and then we had the bad numbers, and then there was sort of like a buyer strike. I think people just waiting out the weekend risk. We did close below 31.06, which is good. And I have alerts set above Friday's high and below Friday's low. And then the 10 MA, I think, is going to be the real key if that acts as resistance now, because what had been support acts as resistance. And when that has broken recently, we've had multiple days down. I think they're going to hold volatility strong, at least into the Fed. And then I would expect there to be a potential IV drop. Now, it's going to be a little bit of tricky. I think Monday and Tuesday are kind of going to be these. We might grind lower and kind of wring out, people out of their longs, kind of almost like a long squeeze. I think if we rally too hard into the Fed, we could get a rug pull on the actual Fed. But if we're down enough into it, maybe we get a dip on the Fed that is buyable. Now, I will say this: if Powell, kind of assuages concerns and we do get a rally on the Fed day, the next day could kind of reverse it. But if we're down big on the Fed, then I think the next day kind of is the Costanza where it goes the other way. So those are my operating thesis, that if we're up into the Fed, we're going to get smacked. And if we're down into the Fed, I think we could see a rally, maybe wring out some more sentiment. So that's sort of my operating thesis here. As far as TLT goes, we have a potential look below and fail situation here. So if you want to be long against 134.51, that makes some sense to me. The upside resistance has been the 50 MA, so could get back up to 140s. I was looking at the 2s and 10s, and the last read, they were 1.617 and 1.854, and here we're at 1.746 and 1.997, so just below that 2% for the Fed. I'll be looking to also hear what they describe as the neutral rate. Are they looking for that to still be 2.5? Are they looking for that to be 3? That we need some clarity on, and we're also going to need some clarity on the balance sheet from the Fed. I'm going to be doing my video in the midweek video this week, by the way, on Wednesday. So it will not. I'll post this too in case you don't watch this section. But I'll be doing the Fed analysis that day. So you'll have my take on what I think the Fed did right and wrong, and where I think we're going from there. So, yeah, potential look below and fail here. Anything below 134.51 is obviously more bearish, meaning higher interest rates. Anything above, we could rally up. I would think at least the 20 MA here, and then potentially the 50 MA. So that's kind of what I'm watching. I also think TLT can be a Costanza situation with the Fed as well. I was looking at TNX. This was looking like we may have had a head and shoulders, but that pattern broke. We're too deep into the head now. We're kind of filling in the gap, and you have a bit of a dubstep play. So anything above the 2-day high here, I would think rates continue higher. Anything below the low, we could have a lower high and pull back. So keep an eye on that TNX, particularly after the Fed. I had mentioned before, I'm watching these XLF names, and I think some people have been asking me, why have these been so weak? And my answer has been, you really need rates to be higher. And I think a lot of their concern about sovereign risk, given, the situation in Russia and, this plummeting in Asian markets, and then, of course, the commodities. With, I showed you that article. I'll post it in the description. There's 2 of them about this big shot guy. And, that metals market, the nickel market has been closed, and they've been kind of postponing his margin call. He says he has the money to pay for it. He's, a large producer of nickel, actually. He's one of the largest in China. So we'll see how that plays out. I think that's going to be very key. I know that they were busting trades, but I have to see where nickel went, if they reopened, and where I haven't been following that the last couple days. But there's that. So XLF 10 MA has been resistance. You're a little bit below kind of this neckline. We came down, we kind of tried to pop back up, and now going a bit lower. So I think that we're gonna have to see. There's that fear, and JP Morgan has been acting just terribly. You're riding on this channel low here, and it kind of looks dangerously close to potentially breaking down. I do think the 61.8 would get a little bit of a bid. But I think we're going to have to see how this resolves post-Fed. I think this is going to really depend also on the course of interest rates. But if we get a recession and a bad economy, the banks aren't going to just keep ripping. They're going to come in, and to me, this looks like kind of like it had a big top here, and now we're in a declining phase. I mean, for me to really feel comfortable about the banks, you need to get back up above 141.10 and 146.69, but 50 MA has been sold, and I'll assume it's going to be a sale again if we do have some kind of a rally. So that's been acting crappy. I mean, Goldman Sachs has been acting kind of crappy too. Remember, people were asking me about this when, you know, they were like, oh, is it time to buy GS? And I'm like, no. 50 MA resistance, you know, this is also teetering. This had a look below and fail, and now it kind of is in danger of the look below and fail failing. So if you're long, I mean, I would be very careful here if it starts losing 326.23. Very key spot there. Let's take a look at the dollar. This is obviously no good for repatriation. I mean, obviously the dollar is the world reserve currency, and people are piling into this. And while I do think short term it probably could go higher, longer term I do worry if, you know, we're going to start seeing parallel economies and parallel, you know, almost parallel banking systems in, you know, those countries that we had prior mentioned, you know, Russia, China, and Turkey, and a few others, and India. But we do have a bit of a uptrend here, and the 10 MA was the last support, so I don't really see a short in the dollar until we lose the 10 MA. So there's that. As far as GLD goes, I mean, the dollar strength is probably hurting gold, and we did talk about this being a sale closer up to the 194s, and even if it overshot, but it's now pulling back. It's right on the 10 MA. Also very key near-term support. If that is lost, I think we could see a pullback to the 20 MA. The big breakout here was 178.85. I'm going to make that let's make that a 5, just so we're clear. Little Jack Nicholson. Are we clear? Crystal. So we could do a buy the dip there, right or right out. But if it fails, then I'm thinking we could see the 50 MA. So will gold hold its luster? I think it's probably safest to trade gold after the Fed because it can move a lot, you know, with the dollar, and we're in a little bit overbought conditions here. So I would actually like to see a healthy check back for a right or right out bounce type of play. But right now, I think you could use Friday's low of 183.44 as a stop. Let's take a look at Bitcoin. So Bitcoin, you know, it's funny, when I want to know what, you know, the markets are going to do, I'll look in the overnight or even regular trading session and just see what Bitcoin is doing. I actually look at the actual coins. I don't look at the futures. I use this for you guys, but when I'm doing it, I use the actual physical, I guess you could say. I mean, there is no physical, you know, it's not like gold, but I use the actual Bitcoin and Ethereum. But TOS doesn't really have that, and I use the futures is the best thing we could do. So we have a triangle forming here, and we're going to have to see how this resolves. If it moves, if we can break out, we'll probably get another test at the 200 MA, which has been roughly resistance. And if we fail here, we could come back down to maybe even 34,000s and 32,000s. Lower end of the range, fill up the triangle. So very, very key spot here. You know, we're testing the lower end of the range, a bit of a doji. I think over Friday's high, you could play for a bounce, maybe back up to the triangle high, but below the low, this could just keep dumping, you know. Ethereum, which I traded pretty well, actually, recently. I'd played, you know, I bought the kind of almost like the dead low in the overnight session and then sold it, you know, within spitting distance of the high. Also has a, you know, 20 MA problem, a downtrend problem, and we'll have to see if this can break out. So I'm just waiting to see which way these triangles break, and if this breaks down, I mean, we could even be back down to the 1600s. Wouldn't surprise me. I'm seeing so many, you know, it's everywhere I look, it's like a head and shoulders pattern, and just like almost everything. Will it all just kind of come tumbling down? We'll have to see, but it's not a good situation, I can assure you. So oil kind of blew its brains out the other night. You know, the market was anticipating the shutdown in the Russian oil, and I think that was kind of the sell the news. And here we go. We had a lower high, lower high, lower high, lower high, but they did bounce it on Friday, I guess. You know, maybe shorts covered, but we are still below the 10 MA. That's weird. I thought I had moved these around. You know what? I've been kind of into oil, and I've been doing it with the. I've been really into the day chart, so I guess I didn't update the dailies. But I was looking. Let me show you what I was looking at. 2 day, 2 days is really not enough, but we really need like a 5 day. Let me see if I can adjust this time frame. Let's do 5 days. Let's do 15 minute, because if we do 5, it's gonna look freaking crazy. I'd even be comfortable looking at 30s. Let's add in a little bit more time. Let's do 10 days. Here we go. All right, there we go. That's what we wanted to see. So we had the big spike up. They sold it off. So we had this 115.54 bogey, and then the lower high had the 119.62. And you can see once that broke and the check back failed, you had this like flash crash here in oil. And 103.62 is a key level. If that breaks, I think you'll see 100 and maybe 95 very quickly. But you can see Friday we were rallying up, and we're still within the downtrend now. We're respecting this channel. But if oil really rallies much higher here, would it be so unreasonable to think we could retest like 115s? Maybe 114, 115. It's very possible if there's bad enough news. But if we fail here and we start coming back down, which is what quote unquote should happen, we could start retesting that lower end of the range. And I think the market in general is very sensitive to oil now. So if oil is rallying, those stocks, those those are rallying, and tech is selling off and the market is selling off. And we're overbought here, which is one other thing to note. So, but if this starts pulling back, then I think the market kind of takes its cue and goes the other way. So it's kind of a counter trend situation as it goes to the market. USO, I had talked about in the midweek video, selling the 61.8. Very, very nasty pullback to the 50% fib, but it held. And if you're long now, if you kind of bought the dip here, just use 63.40 as your stop. Anything below that, I think, is a short. So that's going to be key. I actually am going to set an alert there, 63.40, so 63.39, and I'm going to say row short. If it breaks, I don't believe in front running anything on this tape. I don't front run earnings. I don't front run events. I just trade the market we have afterward. Because I just find the risk the risk reward is so asymmetric. Like I said, good news pops and then sells off, and then bad news is a crash. So and it's not like a dump that comes back up. It just goes down and down and down. So we got the 61.8. We pull back to the 50% fib. That's going to be the key. I really would need to see the 50% fib fail and then the 20 MA. Fail, and if that happens, there's a very, very steep shelf here in the volume profile. This is very little support, so we could come back down into like the high 50s very, very quickly. So just keep that in mind. Oil could keep going up, but you got to be very, very careful. As far as XLE goes, we had this kind of big spike up here, and now we're bouncing. I have an alert here set below Thursday's low, below the 2-day lows, because I think if that breaks, we could even come back down to the 20 MA. I'd probably cover some at the 10 MA, just for a quick like scalpish trade, but maybe we do get that pullback to the 20 MA, which I will assume is support until it's not. Okay, but we do have the potential here for a top. Do I think it is for sure? That to me is still to be proven. But we do have a couple of levels. You do have that kind of excess high and these 2-day lows kind of lining up. And if that were to fail, it is possible there's a larger pullback. Chevron just blowing its brains out of here. We talked about the two times range and maybe booking profits there. The pullback has been very, very minor. So if there is still further pop, we could be seeing into the 190s, which is channel high, and that to me would be a good opportunity to sell. I still think here, still book some profits and just use Friday's low now as a stop, 165.88. I'm going to set an alert there actually, 165.87. You know, a lot of these have kind of the wind at their back with, you know, summer driving season coming online. At or below, say row short, maybe just for a trade. But, you know, there's going to be high energy prices at the pump for a while, or that's pretty sure. I'm pretty sure of that. Exxon kind of blew its brains out at the 78.6, pulling back, but the 10 MA is held, and we're kind of above this breakout zone. If this starts losing, I would say like 82.5, we could start pulling back. So it's still to be determined if we've topped here in these stocks, but short term there was a little bit of a top, and then as soon as this started picking up again, you know, they started rotating back out of tech. I do think, which is seasonally, by the way, not so good for tech summer. So we're gonna have to see if this this can crack the 10 MA or not. I mean, I don't think it's a short until that breaks, at least. Let's take a look at, I'm going to pull up SPY, but we're going to do the futures quickly because that was just a total, you know, it's interesting. Friday and Tuesday looked a lot alike. It was just sort of like every move was just a sale into the close. You had the overnight futures that were nasty. They kind of rallied in the overnight, higher low, and then it was rally time for, you know, Wednesday. So we'll see if that's going to be the pattern here, where we get, you know, lows in Sunday and then they rally it into Monday. It tends to be kind of like we've seen this Sunday night like pukage in the futures. So when we get up opens, this up open, by the way, I'm going to show you, was a little bit of a look. You can't really see it here, but it was a little look above and fail here of this range high. And this was on Putin saying that the negotiations with Ukraine were kind of coming along. And then, you know, the market just kind of sold off. I think people have been, you know, traders have just been making so much money on the short side. And the game has been lower opens or lower mornings lead to afternoon rallies, but up opens lead to the sell-off. So it's kind of like counter programming. I actually thought we had the potential for some short covering into the close, but once you took out the double, like, let me show you. This was the overnight low. Let me make this a little bigger. So often you'll come back and test that, and that bounces. So that was an obvious play to me. Then we kind of tried to retest, but had a higher low, and I thought that there was an opportunity here to rally, but once you couldn't get over the 20 MA, and once you lost that, you know, the double bottom, that was where I think people had their stops, and that just kind of wrung out into the close. We had a very underwater close here. I mean, $45 below VWAP, which you can see was much higher. I mean, you're, you know, kind of in the opening range here. So this was just, you know, kind of pure panic selling, and I think just get me out ahead of the weekend type of stuff. The Qs weren't quite as dramatic on the look above and fail, but we did nonetheless have one, and it did sell off pretty nasty. And the Qs percentage-wise, again, was pretty, you know, leading the way. We didn't take out the recent range low. This is sort of, let me just take a look here. I'm just looking to see if it's a poor low. There's a little excess. It's not really, I wouldn't say it's material excess. It's kind of, I guess I would use the term more weak low than a poor low, because poor low, you know, there's, you know, market profile definitions to that, but it is possible to me that we do get back down there, because we did have the look above and fail of the range, so it is possible we do traverse all the way back down to 13,106.75, and then, you know, maybe ultimately we see our way down to 12,000 at some point, but yeah, oversold. So I would think if we have a down open Monday, there could be a little bit of potential relief. But again, you know, the Fed mixes things up a bit, and I just don't really see. I think we could have a situation with buyer strike ahead of the Fed, and if they rally it into the Fed, just be very careful, because we could have that rug pull. You know, if we're up Monday, Tuesday, and then early Wednesday, we could get the smackage. Let's talk about SPY here. The expected move next week is pretty big, $14.81. So, all right, this is my thinking here. It's actually very, very simple. The 20 MA and the downtrend line are basically simpatico. I don't think there's any real reason for longer term longs other than trades until that is crossed. Okay? We here should have filled the gap, right? But we didn't. We're looking like we're filling this one first. And it's partially filled. It's not a true gap because we had a range here, but we're coming in. I'm looking at a couple of levels here for where I would consider, buying the dip. And the answer I keep coming back to is we'd have to get over Friday's high. And more importantly, to even contemplate it, to get over 426.36, like the neckline here. The good news, if there is any, the silver lining, is we kind of roughly held the January lows still. We are a little bit below it here. I think that had to do more with pinning for OPEX at 420. But, this is the danger zone here, the $6 range. Anything above here I think is bullish. Anything below here I still think is bearish. And we could come down and retest the 410s. And there's nothing to say that we can't come down, to the 2.618 here at 404 and maybe even overshoot to fill in some of these gaps. I do think that there is going to be some big reference, if we do have some kind of big crash open or something. And that's, still to be determined. It doesn't really seem like we're in that kind of a tape at the moment. But if we do get another one of these, could we come down to 394? That was an very big old breakout reference high, and I think that area would be kind of a buy the dip. But we're in this falling wedge down channel, and that down channel here would be 406, maybe 404, depending on we got there. So I'd probably be covering some shorts into there and maybe looking to kind of buy the dip, at least for a trade. But I'm not going to fool you, and I don't want to give anyone a false sense that the market is just going to turn and become bullish again, because the chart looks like crap. To be honest, we're making lower highs, lower lows. You have head and shoulder patterns, just as far as the eye can see. We're having a hard time now at necklines. We're kind of at a neckline, and it seems to me we haven't seen the real pain yet. As far as, Apple was starting to kind of break down. We're starting to see, some capitulation in some of the names, but it's still very orderly. It's still, we're not trading in, what is it she says on TV? Finerman integers, right? You're not seeing Apple trade in 2-point clips. And you're still seeing a lot of responsive trading at technical levels. This to me is all just a technical pullback. Now, is it possible we get, some relief and the decline ends here? We're kind of near the end. I don't know, because of the situation with a potential recession now. With the well, here's my question for you: what's the good news that's going to really rally the market here? We don't have a good economy. I know the Fed and everyone, they're all looking at these old numbers, but oil prices are much higher now. Commodity prices are much higher now. You'd have this recession that's coming to Europe for sure. You have, a depression in Russia. Ukraine is going to take, I don't even know how many billions, could be $1 trillion to rebuild after all said and done here. And not that these are huge economies for the United States, but there's the contagion fear. Who's exposed to who, is, which European bank is going to blow up from this, and, is that who has exposure, like JP Morgan, I said, has exposure to that big shot guy over in China. So it's kind of we're afraid of what we don't know until we kind of get clarity on that. And on top of that, you got a Federal Reserve who is hot on the trigger to raise interest rates. The inflation that we have right now is supply chain related. Right? China ports were shut down. We have the Olympic situation there. It's still terrible. The supply chain restraints. You have, or constraints, you have the situation, with the truckers that happened in Canada. You have oil problems. It's just there's a lot of problems, and interest rate hikes aren't going to solve them. But what interest rate hikes will do is crush growth even further. So you'll have stagflation, or maybe no, stag. It might just be negative. I don't even know what we'd call that. But we have slowing to, crashing growth and massive inflation. So that to me is problematic. And I just don't see what, unless the Fed, decides to say, okay, we're not going to raise interest rates here, and maybe we'll go back to QE. I just don't see what the catalyst is going to be here for still higher. That said, I'm open to it. I know the fact that Janet Yellen and company, everyone keeps saying it's going to be a soft landing, makes me think. It reminds me of Hank Paulson saying the fundamentals were sound, right? Like the weekend before Bear Stearns and Lehman Brothers went under. So, I don't think they know. I think it's more like wishful thinking. And I want to see the technicals. The technicals always lead. Price leads. So I'd like to see, the 20 MA and the downtrend break. I'd like to see, this gap fill. I think that this area will be the next resistance, by the way, if we do get there. Again, I think it's sort of an order of operations situation. I think we could have some more weakness or maybe some strength before more weakness, but ultimately I just the charts are very, very strained here, and it still feels to me that rallies aren't lasting long. I will say this though, the last Wednesday, Thursday kind of felt a little different, even Tuesday to some degree. I mean, Tuesday was terrible, but Wednesday, Thursday felt a little better, but by Friday, it was kind of not good. So for me to really get constructive here, we'd need to take out the Friday and Wednesday, Thursday highs and really get above the 20 MA, which has gotten sold, So there's that. IWM. So this didn't really, I had someone messaging me today that they thought IWM broke down. It didn't really. It doesn't look good. I mean, there's very good opportunity. It fills the gap here, but it just, to me, this was just still in range. And IWM, again, a downtrend below that shelf of, the almost year of consolidation, and now we're consolidating lower. Could it just be a consolidation for a step lower with more consolidation and then lower again? I'm looking again at a lot of these charts, and there's a theme in common that we keep coming back to the 2019 highs. And even in SPY, you're talking about 339. I mean, we're really far away from there. To take back all of the kind of COVID free easy money rally, and you're talking about head and shoulders patterns with 2 times and 2.618s at these levels, and that would line up with the 30% crash. So, and that 30% is roughly what you get with a recession. So it's not a guarantee that happens, but it kind of looks like that may be the ultimate end range here. Again, the order of operations, I don't think the big danger starts until after the end of the quarter. Dow, again, also looks like crap. Big kind of consolidation, and we're kind of testing below there. All these falling wedges kind of need to break, to the upside to get bullish. The common theme I think we're going to have is that we need to get back over necklines, 340 here to me is key, and 20 MA. I mean, at least the 20 MA. So if we could get over 20 MAs, we could get over the 340s, then I'd be, maybe interested in the DIA. That's $10.60. I was looking at a couple of the stocks here, like Caterpillar. This has been rallying. It's back up into some resistance, probably a good area to book some profits. If it comes all the way up to 224, which is the downtrend, probably a good area to book profits and maybe do a right or right out short play for a pullback. Because again, we're coming up from the bottom, right? Still in a big downtrend, but a lot of relative strength in a good spot. If you're currently long, the 200 MA looks like a good stop to me, 207.70 at the max. I would even go to say Friday's low is a good stop. So let's say you're full boat here, half I would take off at 212.30, and then if you were to lose, you know, the 200 MA, maybe the whole thing. I'd probably honestly just use the Friday low for the whole thing, but if you want to use, you know, these lows around like 207s, that to me would make some sense. I saw them talking up Deer. This still to me looks like it's in the pattern. If anything, this looks to me like a look above and fail. So for Deer to run, it needs to get and hold over 400.34. Until then, I think it's kind of like near the higher end of the range and probably a good area to maybe book some profits into. Could Deer break out and just beast mode? Yeah, sure. But it's got to get over 400.34. And until we see that, it's hard to just make that assumption. Boeing looks like crap. I mean, it seems to me that Boeing, until it gets over the 200 MA, which has been the short every time, there's really no reason to own it. I mean, I watched the Netflix, they made a Netflix, it was like an American Greed Netflix movie. Oh my God, was it just terrible. So at the very least, it has to get over 188. If it can do that, maybe it gets, you know, like back up to like 204, but stock looks very, very technically challenged here to me at the moment. I wasn't planning on doing Lockheed Martin, but let's do. Looks to me like a potential secure high here, and anything below 442.53, I think you got to book some profits in. Maybe even a mini Head and Shoulders here. We all know they're going to get contracts. There's going to be more military and so on and so forth. But you know, to me, the play to be long was, you know, ahead of the hostilities, not once they've already kind of happened. All right, let's talk about the Qs. Again, a really, really challenged, crappy-looking chart. Head and Shoulders galore. This one is a slanted one. These are harder to pull off, but I will tell you, when they do go, they really, really go. So what do I need to see here for me to change my tune and not be bearish? Well, it's actually very simple. The January low was 334.15. This reference high, 338.19, which was support. We got to get over that. And we got to get over the 20 MA, which is 340. So that's getting close to there. If we can get over those levels, I think we get up to 350 and maybe even the 50 MA. But anything below 334.15, I don't see the need. There's no need to be long. Maybe if you come down like to 314s or close to 303s or 291s, that would make some more sense to me, you know, if we get a move lower. But Head and Shoulders below channel, 303 was a very big breakout area. I would imagine that zone around like the 300 probably finds some support for a bounce trade. But to kind of negate the pattern, it's got to get over the 20 MA. It's got to get over 338.19. I'm going to actually set an alert there. Create alert 338.20. And if we can clear there, and I don't mean just like pinprick above and then go back down, but if it can clear and hold, that to me would be the row long. If you want to use, I would also try Friday's high. If we could get over Friday's high and negate all of the ugliness from Friday, then game for a right or right out long trade for a move up to the 20 MA. Okay, very, very, very simple. Expected move here is $13.83. XBI, I'm not long. I have a put ratio play on. So any further kind of dumpage in this, maybe if we get down to like 75s or so, I'll just leave the naked short put on and close the ratio, like the 1-to-1, and then take on some long exposure. Because I do think I'm going to want to start getting long closer to maybe 62s. I'll have to see where the position is. If I can close the whole thing out for a nice profit, I might just do it. But I kind of have to see where things are going. So I'm keeping an eye on that. Sorry about that. I have a girlfriend who likes to make noise while the videos are going. So let's take a look here. SMH. This is always a leading indicator here. And also kind of dipping below recent lows. I mean, it did have a 25% correction. We were well below the 20 MA, well below the channel. I mean, at some point, I don't know when this is going to be, but I am expecting a throwback to like the channel at some point. But I mean, this has really got to hold like literally right here. If not, we could complete the head and shoulders, and I mean, you're talking about a move down to like 174. That would be pretty freaking ugly. I don't think it'll be like a straight line. I do think like 216s here would fill up the triangle, and there'd be some support there. But I don't know what the news would be to get us there. Maybe, the invasion of Taiwan or something. I'm sort of thinking, the Taiwan invasion might take a little bit longer, because I think the Chinese see what happened with Russia, and I think they want to make the necessary changes first. And then I think that Xi has his election, I have to double check this, but I want to say November. And I think after that, maybe that would clear the way for that. But I mean, who knows? There's a lot of chaos now. Maybe he, sees the opportunity and kind of just goes. But I kind of think that they're keeping Xi the powder dry. Maybe he's like the peacemaker. I know that they're doing interview like meetings in Israel right now, and that is kind of where the peace talks are going. But maybe Xi is going to kind of like come on the scene as kind of like the peacemaker and one up Biden. That's what I would do if I were him. So we'll have to see. We have this neckline here, and I'm going to make this, it's already a 5. So 249.36, and we're testing a little bit below there. We had the look below and fail, and now the look below and fail is starting to fail. So really, really shaky ground here. Even the good ones, Avago, this thing was just unbelievably strong for so long, and it bounced back up to the 61.8. We're now below the 50%, and we're kind of like right on the 38.2. It hasn't broken trend yet, and it's still like kind of okay, but the 50 MA has been resistance, and I think it really needs to clear the high. I'm going to put an alert over Friday's high, because if this were to get above Friday's high, we could potentially see a move up. If it can clear the 50 MA, maybe we come back up to the higher end of the range near the 600s. I was looking at NVIDIA. This was also a really we also need to see this kind of go. We're below the breakout line here, 230.43, below the 20 MA now, which has been resistance. Remember up here, this was so problematic. And, if this were to continue down, I mean, we're kind of, I'm just looking around here. I want to see what the 50% line is. I thought I had this actually put in here, but like 204 is like the halfway line, and it's been holding, but could it come all the way down to 179s? It's very possible. So again, with this one, I'm going to put an alert over the Friday high. So unless these high, the Friday highs clear, no reason to be long. Unless we're down, big. Now, I want to just emphasize, over Friday's high is the move that shouldn't happen, quote unquote. We should go lower here. So if we do what shouldn't happen, we probably can rally, and you'd have taken back multiple, down days, and I think we'd get at least a pop to the 20 MA at 236.21. AMD also not looking fantastic. I mean, it's still within the channel, but it's kind of like got a down, it's got the down wedge inside of a down channel. Let me make this, I'm going to just make it yellow for now, so you can see. Let me get rid of this up channel. This was an old up channel, but you can see we have this kind of down wedge inside of a down channel, but it's still kind of within the up channel, which has been responsive. So maybe a move to channel low down where like 98 would make sense for, 98, 99, that area has been holding, so maybe it kind of holds again, but the more times we kind of bang on it, the more problematic it gets. So these 99s are very, very key. Would I try it right or right out? Yeah, potentially. That at least for a day trade, I think. Let's get into real Momo land. As far as the FANG kind of names, so Microsoft, again, all of these names are really just teetering on really, really key levels here. This 280 quarter was the lows back here from October. We have seen moves below there, but they've been very, very brief. And, it's is it possible we get down to 269-ish and we hold? 263.19 was kind of the breakout. I'll just keep it simple. I'd like to stay above 280 quarter. Above there is still kind of healthy. Below, I think, does have a short move down to like 268s. So Apple was starting to soften a little. It hasn't broken down yet, but it isn't strong. And we got the 2 times range here. It bounced. It checked back basically to the neckline. And if we were to fail at like 150, 152s, we could come down to the channel low at 145 and maybe even have an overshoot to the 2.618 at 142. And then the big breakout for Apple was 137.98. Down there, I would be interested in buying the dip for sure. But again, we're seeing lower highs, lower lows, and we're kind of below a key level here, 157. So the key for me is if it can hold the 200 MA and the reference low here. If not, it's probably got another leg, at least to 150, and then I'm thinking probably 145.09, which was a big breakout. So there'll probably be some support, and I'd probably start buying, like if, let's say just for laughs, we have a really big gap down on Monday and Apple opens down at like 145 or below, I would sell puts or buy shares down there. I'd start nibbling. But if we don't have one of those and we're kind of just normal, this is the key zone here between the 200 MA and this 152. I mean, this is kind of the must-hold area. And Apple has held up pretty well. Usually these bear markets don't end until they get to all of them, particularly the strongest ones. Amazon. So I had a really very interesting experience this week with Amazon. And I bought it this day here. I hate to say this, but because it's kind of a lack of discipline, and it's almost a shame that it worked, but it did really work. And I think it was just that I had really good trade location. I felt we had the look below and fail, and we had the kind of the higher low, and the probability of this, at least staying, choppy in range or going higher was high. So I was long, and I had bought it. I forget what the exact number was. I got long. It wasn't near the highs, but it wasn't the dead low, but it was here actually. It was 27.48.33. I put an alert here. It had been higher, and when it pulled back to there, I got in, and I was already happy with the close. I was waiting for the ad over the high, but I didn't have the opportunity because it just gapped and it went huge. And in the after hours, I got a fill right here at 30.81.99. Why did I pick that number? It was just this day's high here, and it was roughly these highs, and it was the channel, and it was just below the 50 MA. I didn't think it would. It actually wound up overshooting a little bit to above the 50 MA by like about $9 or so, but I didn't think it was going to go I didn't think it was going to go the same day, So I kind of had put it in, and I put my sell order in, and then just hanging out, and I see my phone ding, and I got a sell order, and I was like, oh wow, like what, there must be news, and I kind of knew instantly once I looked and I saw my alert on my phone, like what filled, and it was Amazon. I was like, oh, they must have split the stock. So people are asking me, is this shady? Well, it is a little. It's a little odd that they didn't choose to do it on their earnings call. So I think what Amazon saw was that the reason I had the 50 MA sale was because we stalled here, and I knew the channel was here. This was no surprise. So I had my order in, and I was thrilled that it filled, and we never really got even close back to there. And now we're stalling at the 20 MA, which was recent resistance. So with Amazon, to get to the 50 MA now, just as an FYI, we need to clear the 20 MA. And would I buy the gap fill? I already have orders lined up. If we get the gap fill or a little lower, I'll go back in. So it's a little shady in the sense that they didn't do it on an earnings call. It isn't that shady that it wasn't like the week of or like the week before or the Friday before the earnings of the company. What I think probably happened here is that they had employees with stock options that are well above where the market is, and they were trying to get the stock up so that they can fill that in. And they do have a bit of a buyback, so maybe the employee stocks that's going to get sold, the company is going to retire, buy back and retire. So I think that's what happened. I think they just kind of tried to manipulate the stock. And, in the current climate that we're in, the fact that Amazon isn't up, higher just shows you, just how poor the sentiment is on the street here. And people weren't messaging me, oh, is this a buy? They were messaging me, is this, shady? I mean, that shows you where we are in the market. So very simple. Above the 20 MA, we get back up to the 50 MA. Anything below there, it's possible we fill in the gap. It really is. We saw this with Google. They have these splits that are far out, and I do think that there'll be trades around the split, closer to the split, but we have to get through another earnings cycle on both Google and Amazon. So there is that. As far as immediately after Amazon went, I texted. I was texting with some people, some DM subscribers, and I was like, maybe this puts Booking into play, and you can see this kind of got a bit of a rally. It's stalled though at the neckline. So I'm thinking maybe on Booking's earnings, Google's splitting the stock, Amazon splitting the stock, maybe Booking does it too. So I'm kind of thinking this could be the summer of splits finally of these big name stocks. Any break here below, I mean, the 200 MA is obviously going to kind of be some resistance, but if we do get a pullback, it's a shame we stopped just shy of here, because this was kind of my buy the dip zone, and it may be again if we get, if we could get down to 1,589, I'll probably put in some buy orders there, because that's the end of the volume distribution, and I would imagine it will finally, I'm going to put an alert right now. Create alert, 1589, and I'm going to put 01. And with Booking, I should probably put it let me just put it 1590, because this thing moves so fast. It could already have bounced $10 by the time I get the alert and get the order in. I'll probably just put in a resting order there, but I'll put in row long for now. But we are near the neckline here, and we'll have to. I mean, I think a lot of this is going to have to do with just overall market sentiment. So, these reopen plays, I would think Booking would be strong. I mean, I was thinking Airbnb. This was one I've been kind of bullish on. We talked about this for a bounce play. Maybe we get to do the time warp again. Down near range low, I was talking to some subscribers today, and I was saying, if you can get this blown out closer to the 20 and 50 MA, but we never got there. It's just interesting that stocks that should be going a little higher are stalling early. So I have an alert set here around 141.18. If we could get there or below there, I might try and add it back on with some kind of put ratio or maybe just a call spread. Let's go on to, speaking of Google. So Google has been holding up pretty well. I guess, they had good, kind of good earnings, and, money that usually would go into Facebook probably has found its way into Google, but it's really not acting that well. I mean, the stock is well off the highs. It's kind of just banging around near, consolidating around the range low, and I just don't necessarily know if it's going to, just kind of languish. You know, these kind of big dollar stocks, if the Nasdaq's drawn down, they're big components of the QQQ. And I think that if we could get above, let's say, Friday's high here, there's probably a quick trade up to the 50 MA, but I think the 100 MA here, which had been, I'm too far zoomed out here. The 100 MA, which had been support, probably is, you know, some pretty solid resistance here. So, you know, this is one that I'm sort of constructive on, but you know, it's you got to be a little careful, you know, because they, like I said, they haven't taken out all these stocks yet, and Google is still kind of relatively still high compared to like where some of these other ones have gone, you know, recently. Like Netflix, for example. I probably should have done Facebook because that was the more near competitor. I mean, you know, for money wise, but Netflix, this was one that, like, for example, got smashed on earnings. I think this is all, again, just multiple compression. And if you're slowing in growth in any way, there's just like no benefit of the doubt at this point. Now, this one actually had a pretty strong rally. And I remember we were talking about this, and I said I'd be into buying a dip, but lower. I didn't want to chase this move. This was Bill Ackman, right? He bought the dip. And now you can see we're testing. We had to look below and fail, and now we're just below. So I would think that this could keep going a bit lower. I'm thinking, like, maybe we get down to like this 260s or below range. I mean, 290 probably has some support. They're going to have their earnings again. So the question is, I don't think we're going to get another big, huge drop like this. Is it possible? Do gaps happen in pairs? Yeah. Do I think, you know, we could get another gap? That it's very possible. And I think that these stocks that kind of blew up the last time aren't going to really see a recovery until we get, particularly given the magnitude of the declines, until you know, their next earnings. So would I be waiting with a catcher's mitt around like 250? Yeah, probably. I mean, you can see I have my you know, neckline 2 times range down there, but at the very least, it's got to clear the 20 MA, you know, for a day trade back to the upside. So if you want to kind of try it here, maybe, but I'm a little leery anything below 351. And, you know, for me to feel more comfortable, I'd rather it be back up over 385. Speaking of Facebook, this one also, you know, and Facebook is not expensive here. It's like 13 times earnings, but also looking really in danger of another kind of leg lower. This like 190 area had been key. I have an alert set over Friday's high for a long trade, but could this come down, you know, down lower? I mean, there are still, you know, open gaps that could be filled. Do I think it's going to get all the way down to 137? I mean, that to me seems like a bit of a stretch. But, you know, they did shut down Instagram and, you know, and Facebook in Russia. I don't know how much that's really going to impact them so much. But we are hovering around the 78.6. I mean, this area, I mean, if you look at Facebook, here. I mean, you're only around like 13 times trailing earnings. If you go, you know, assuming earnings don't completely fall off a cliff here, I mean, this is a very, very historically cheap stock. So into further weakness, you know, I don't mind starting to nibble on this, but be mindful, you know, that it's been one of these stocks that had been up into earnings, it was down, and the rallies have continued to get sold. We're still in a, you know, a bit of a down channel here. It had looked to me this week like it was starting to kind of have the look below and fail recovery. And then, you know, Friday happened. So it's got to get back up over 190, or else I think the risk is lower. Above 190, I think, could rally. Adobe, someone was asking me about this. So this is back into a very key area. The bounce was up from the 61.8 to the 50, and now we're kind of coming back down. The 386.75 was the 2019 high. You know, anything below 420 basically has some of those levels in play, and you can see I have like 2 times ranges and stuff in play. The 61.8 had bounced it. This is, again, all multiple compression, I think. Adobe, was a big story during the pandemic because people had to buy more. If you were working from home, you had to buy a new license for your, home computer. I still think the software as a service business is great. It's still trading at 40 times earnings, So this is, again, just kind of multiple compression here. And I think you're going to have to start seeing, higher lows. Their earnings are going to come up soon. And I'll tell you, if we're down too much into them, it might be an opportunity. But what I'd love to see would be like another kind of gap down. And then I think that gets bought. Because, Adobe is, this thing is just creamed off the highs. But, would I get in ahead of earnings? It's really tough. It's really, really tough these days. But if we can clear the 20 MA for a trade, I'd probably play it for a bit of a long. But it's got to really hold right here, or else we got a lot, a little bit more to go. Shopify. So these, how can I put it? I think a lot of these pulled a lot of growth forward because of the pandemic. And this stock should have never really been $1,700. I mean, who are we kidding? I had mentioned in the midweek video, it was right here, right now at 514. So that was the play for the bounce. We got back up to the, 585 reference low, and now it's kind of coming down. We got to see it. We're back to like those breakout highs. So, I mean, down here, could it go a little lower down to like the 400s? Yeah. I mean, that to me would make sense if you want to sell like some puts sub 400. That to me kind of makes some sense. If you could get back up over 594.90, then I think it's a long. But if it starts losing the 2.618, it's a little dicey. But yeah, I mean, 20 MA has been resistance, and I will assume that is, again, if you want to do some strangles, that makes some sense. If you want to sell like 50 MA puts, calls, and like sub 400 puts, that makes some sense to me. McDonald's. So they're pretty much... So they're down because of the increase in gasoline, right? I mean, truck stops and so on and so forth. You have less people presumably driving. I mean, I guess you could make the argument that you have more people buying cheaper food, fast food, if they're strapped for cash. But I think that's the what the story is, and also that they kind of shuttered their Russian operations for the moment. If you want to be long McDonald's, 221.93 is a good stop. Very, very simple. That was the breakout. That's the must hold. I think it could rally maybe up to the 20 MA in the channel, which I think it will now kind of respect. And if I were to draw in some potential resistance, you're kind of up here. This like 236 to 239 area on a bounce. So yeah, as long as it's above 221.93, if you want to roll that up, or I should say trail that up to 224.20, Friday's low of day, that makes some sense to me. But McDonald's, maybe. Valero, this was one someone was asking me about. It's up into some resistance area here. The pullbacks have been holding the 20 MA, so I would trim some here still at the 61.8 and just use the 20 MA as a stop. Very simple. The next stop could be the end of the distribution up here closer to $100. So you're in an up channel. It still looks kind of bullish, and you do have some money flow picking up, and they do have some earnings coming up. If they keep rallying it into earnings, I'd probably be out before the number, but I mean, as long as it holds a 20 MA, I think it's okay. Ebix, this is something I'm not really that familiar with. It popped up to the 50% fib. It's pulling back. It's got to hold right here around this like 38, 34 area. Below there, it's been problematic, and if it does, you could probably see the 50% fib or maybe even the 61.8. But this was obviously a pop on earnings, and it's kind of got a hold right here. If you want to be long here or adding to it, let it get over 42.89. TT. Train Technologies. Double top. Broke the fulcrum pivot. The reference highs from back here were down around 118. Will it get down there? It's possible. 168 is definitely going to be resistance now, in my opinion. Yeah, I mean, if you want to try it like new money long here, the 20 MA is where it has been resisting. So maybe over Friday's high, I'd set an alert, 152.52. I always love when they kind of line up, right? Like 0.52, you know, so here 0.53, maybe row long. These guys trained that make the toilets, they used to be American Standard. I'm not sure, I have to look this up. But yeah, that would be the only long setup for me. CrowdStrike. This held really nicely, the breakout area. And you have a 2-day range here. So I would, you know, again, we have the problem with fades, so I would use either Friday's low or Thursday's low as the stop, 182.55. If you can get over 198.67, 0.68, then I think it's a row long, you know? And you could come up, I would think, to at least to the 100 MA here, which is probably a good area to sell into because that's been some resistance up around 211. I was thinking about Palo Alto Networks when I was talking about this, not Pawn, P-A-N-W. This is now respecting the channel. So I think if you're long some Palo Alto, I'd probably be booking some profits here. You got a 2-day range here. So if it loses the 543.74, I'd be out. And the 100 MA has been the key support. So if it lost that, I'd be short. If you want to buy it for a day trade down at like, you know, 523, that makes sense. But if it loses it, no bueno. Wow, I have Valero written in twice. No bueno. Roblox, this also, like Facebook, got smacked up. It's below, you know, the earning, you know, these have just been these stocks. They gap down and they kind of just keep going and they're selling the rallies. So the 2.618 is down around 14. I don't know if that's going to be the case or not. Roblox isn't so cheap like Facebook. Yeah, I mean, they're not even profitable. I mean, Facebook makes loads of money. So if I had my choice between the two, I'd probably be more into Facebook. The 20 MA was where this broke down from and will probably be resistance. You can see I have an alert set there for potential day trade short. Firm, this got killed on the consumer sentiment number. I mean, this thing is just unbelievable. They just keep, this looked like it to me like it was trying to bottom here, but then just kind of took it out here. Where, you know, water seeks its own level. We're in a, you know, vicious bear market. I don't know I don't know where this will bottom. There's no precedent. You know, you look left, there's no numbers. The only thing I could say would be if you took the IPO low and you project that up to this initial range, and let's say we put a 2 times range on the downside. I'm just curious to see where that would, and not to be making stuff up here, you know, but like if I was, you know, thinking if we, you know, get rid of sort of all of this and we move it to the downside, I mean, you're right there, down here around like the 35. So if we did a 2.618, I mean, it would probably be negative. So I can't really use that as analysis. There's another way I'm going to do it. I'll show you in a second. Yeah, I mean, you're talking about a negative number. I mean, could it go to 0? I mean, anything's possible, but I just don't see that as the situation. So, I mean, around here is sort of, I mean, I have a call spread on with a longer dated short put. Not really loving it here, but, you know, I may have to stop out of this if it can't hold. I know on the 22nd, they're presenting. They have, like, they're part of a cyber conference or whatever. So I'm going to put an alert over Friday's high. If we can clear that, that's the 10 MA, 3706. So 3707. If it could clear that, I'd be row long, but you know, you're bobbing for apples here. I mean, stocks are making lower highs and lower low here. You had equal lows roughly, and you got to get back up over there. If you can, then I think it could be a look below and fail, and maybe we rally back up, probably to 34s, but it's going to be a challenge. And I think that, you know, Morgan Stanley came out the other day. They had like a bit of a conference, and they put a pretty high price target. I think it was like 140 or something, which seems a little high to me. But could it get back up to like 75? Yeah, I mean, that seems possible, but you know, we're going into potential recession, and this is a stock that everyone seems to be worried about. Oddly enough, the arguments that have been made about it are, you know, how it will react in a bad economy and a high interest rate environment, and we're not in a high interest rate environment, so we'll see. That's all I have to say. All this fintech stuff has been killed. I mean, PayPal is murdered also. This is PayPal's third bad earning. I mean, if you can get PayPal down here around like 82 or below, I mean, this is starting to get, what is this trading at? This is, I mean, it's still 27 times earnings. God, it's amazing. It's down so much, and it's still so expensive. I do think that these are going to have some turnaround at some point, but I think it's going to have to be with their earnings. We're going to have to see how they report. I mean, Square, which reported, and they had good numbers, they popped it, and I said I wasn't chasing that. I was waiting for the pullback. So we got the pullback, and they rallied it, and now it's below there too. So I oddly enough, I never did this trade. I kind of thought got away from me here, and now I'm sort of thinking it didn't get away from me. But if we could get Square down into like the 80s again, I'd probably try it. But I mean, it's just, you know, for some reason, you know, I guess it's just multiple compression. That's really what's going on here. It's just it's their earnings weren't so great. This has a really super high PE, but you know, I do think PayPal is getting very interesting here. And for Square, I'll wait until it breaks the 50 MA. That's been the resistance, or maybe it gets, you know, back down lower into like the 80s. I'd probably be into it there. Have a great weekend. Sorry to be so dour, but, you know, until the charts turn, and when they do, and when I think it does make the turn, I'll make that call. You know, we did that in the pandemic. I told you before the drop, I was worried, and then it wasn't the dead low, but it was the day before the big gap and go, which never looked back, that I said that I thought the market was overdone and probably time to buy. So, and that's all documented in tweets. If there's anyone who challenges that, I'd be more than happy to keep a folder with those bottom call tweets. Great weekend. I'll see you for the Fed Wednesday. Cheers.